All right, here we go. Welcome back, ladies and gentlemen. Welcome back, investors. Ticker Time News. I am Adam, and the stock market surely did finish the first week of May on an underwhelming note, as the Nasdaq fell 1.4% on the day and down 1.5% for the week. The S&P 500 slid 0.6% on the day and down 0.2% for the week. Small caps fared whoa. Wait a minute. Small caps. Here we go. Small caps. They fared much worse. The Russell 2000. Man, the small caps just keep getting beat up. And I am doing a little bit more to become more familiar with small caps. There was a question asked about that in the comments a few episodes ago, asking about small caps. So I am educating myself more on small caps so I can incorporate small caps more into my videos. So Russell 2000 fell 1.7% on the day and gave up 1.3% on the week. Now, the market definitely followed Thursday's faceplant with an opening stumble that pressured the S&P 500 back towards the low for Monday, but not quite as low. The chart here is the S&P 500. It's the daily view. We can see volume is starting to mellow out, flatten out. RSI, relative strength index, also flattening out. Money flows. I'm going to remove volume here for a moment so we can get a closer look on the daily candle for today. I mean, you can see the candle didn't move that much. As a matter of fact, this entire week, today's actual candle was the smallest of all 5 sessions. Now, it still had some pretty big wicks, especially on the bottom, but it got to a low today of 40.67. On Monday, the low was 40.62. So only a few points away from making a lower low than Monday, but it didn't. It stayed a few points above, and it also closed within our yellow box here, which is, I think, important, staying above 4,100 for the S&P 500. Now, the early morning selling was driven by influential sectors like technology and consumer discretionary. But the same two groups contributed to a rebound that briefly lifted the S&P 500 into positive territory late in the morning. And when we go look at the 5-minute view on the S&P 500, I'll put volume back up here so you can clearly see today. Right here, this peak right here at 11:20 a.m. Eastern Time. That was a peak into the green ever so slightly, 0.3%. So that was today's high, 41.57. So the market really didn't move that much today. I know 0.5%, it is a big move, but not as big as we've been having, right? So this move in the positive territory late in the morning, we tried to get back to it, but also failed again right around 1 o'clock in the afternoon. And then we slid. And then we fell to the lows, not quite of the day, because those were hit early on, 9:55 a.m. Eastern Time. That's when the market hit its lows for the day. And we did not get that low this afternoon when we were trading. Now, it kind of mixed here, but definitely selling into the close. It wasn't that bad. I mean, we did rally here an hour before the close here, and then kind of just floated sideways for the rest of the day with a little bit of selling. So the afternoon trade definitely saw a little bit of selling, right, earlier in the afternoon, but that last couple of hours, we got a little bit of a boost, which wasn't too bad. Now, the S&P 500 was able to stay above this morning's low, like I just mentioned, and close within the yellow box. As you can see here clearly, it's at the bottom of it, but it did close within it, staying above 4,100 is a good thing for the S&P 500. Now, the April jobs report was released ahead of the open. And you can see investors did not like what they saw in that data. It was showing stronger than expected headline payroll growth, which masked a decrease in the labor force participation rate. That's the bad part. That rate dipped to 62.2% from 62.4% and is now more than an entire point below the pre-pandemic level. So that means if we look at the daily chart here and we go back a year ago, 2 years ago, 2019, pre-pandemic, right? You have to go back a little bit farther. There we go. Pre-pandemic, where this big drop is right here. That was March, late February, all of March, and it rebounded at the beginning of April. But right now, where we are, and you can see on the chart where we are all the way to the right, versus the highs reached right over here above my head in 2019. We're an entire point below market participation when it comes to employment. There's a lot of open jobs. So as I talk about the economic data that was released today a little bit later on, I think a picture is going to start to take form on where we are. And I've said since the beginning of the year, the second half of this year is going to be worse than the first half of the year. And I think once you hear the data that came out today about the economy, about the labor participation, you will start to see a picture forming on where the economy is right now. And I don't think it's going to be a pretty picture. 9 sectors today, 9 sectors, finished the day in negative territory, with materials down 1.4%, consumer discretionary down 1.3%, communication services also down 1.3%, all three finishing at the bottom. Now, the top-weighted technology sector, it declined 0.8%. It also ended lower after a very volatile session. While energy up 2.9% and utilities up 0.8% did outperform throughout the day. Now, the consumer discretionary sector was one of the worst performers of the week, amid growing concerns about consumer spending in the face of high inflation. The sector lost a total of 3.4% this week. And who was the big driver of that loss? Well, the top stock in that sector is Amazon. AMZN is the ticker symbol. Remember, you can follow along at home using TradingView. There is a link in the description to a free account. You also get $30 back if you do sign up for a paid account, but it is free, so check that out. We have argued here that a fair price for Amazon, based on the economy, where we're headed, where we've come from, the pandemic was an explosion for Amazon, but that's coming back down. So how far above should Amazon be above its 2019 levels when it was reaching highs of $21.50, $2,150 a share? Should Amazon fall that far, or maybe be a little higher? Well, we've kind of marked out a spot, and I've got a green box over here, and I call it my buy box. But I need to get volume out of the way again so we can better see the daily picture here. Amazon is slipping. It went right through my buy box. Open it up a little bit bigger. There we go. You can see it flirted around here when we had those couple of green days this week. It flirted with this buy box, but yesterday it slipped right through it. And today, just kind of held. It was down 1.4% officially for today. A very small candle compared to its 7.5% drop yesterday. And then its humongous 14% drop on April the 29th due to earnings. And the market cap of Amazon is $1.167 trillion right now. Amazon's come down a lot, and it pulled that sector down with it. When you have a market cap of over $1 trillion, that stock can move the market, especially its sector. Amazon sank to a 2-year low. 2-year low. So you bought Amazon 2 years ago, you're right where you were. You hadn't gained, you haven't lost. Unfortunately, we're going to see more of this. Now, Tesla today, Tesla was fighting and fighting hard. TSLA. My view, Tesla is definitely one to get behind. And whenever we have lows in the market for Tesla, I say it's a buy. Tesla got down to $843 a share today. That was a buy. Tesla closed today at $865 a share. It was down 0.8%. I say it's a buy even at this level. It's a long-term future hold. That's what Tesla is. It's not a trade. There's no trade setup that I'm thinking about with Tesla. It's a buy and hold for 10 years, a decade or more. And you're not just buying. You've heard me say it a lot. You're not just buying a car, an electric vehicle company. You're buying a robotics company. You're buying an energy company. You're buying full self-driving, automation. So a software company. Tesla is like a holding company for all the different things that it does. So it fought today to remain above its 200-day moving average. And right now, that 200-day moving average is sitting at $910 a share. So it is slightly below it. But all week, you can see it here, except for May the 4th on Wednesday, and then, of course, yesterday falling below it. All week, and including a few days last week, it's the orange line coming across the screen here. The 4 candles, April 27, April 28, April 29, May 2nd, May the 3rd. It acted as resistance. Tesla typically closed right up against its 200-day moving average. So it's fighting to stay up there. Another big one, and Tesla's market cap, $896 billion right here. Now, in the technology sector, there was another big fish in this big ocean of stocks. Apple, ticker symbol AAPL. It did most of the hard work today in preventing the technology sector from finishing at an 11-month low that was brought down in early morning trading. Apple which is the top tech stock in the sector, finished higher today, up 0.3%. Now, it's lost 0.27% in the after hours, so it's almost, given up everything that it gained today. But it was also trying to reclaim its 200-day moving average. Right now, that's at $159 a share. And you can see this teeter-totter pattern, right? Where Apple is above it, is below it, but it's trying to hang on to that 200-day moving average. Can it continue? Its market cap, $2.5 trillion. It has served as an area of constant back and forth for the past couple of weeks, that 200-day moving average. And it is awfully important for Apple to hold that position the best that it can. Now, on the upside, in such a dismal market today, in a dismal first week of May, the defensive-oriented utility sector live stream, I always get something messed up, benefited from volatility in the broader market, extending this week's gains to 1.2%. While energy also outperformed throughout the day. The energy sector strength was underpinned by continued strength in crude oil, which climbed 1.7% today to $110 a barrel. Energy was up 4.7% on the week. Not too bad. The energy sector, meanwhile, jumped 10. I'm sorry, my apologies. I got my numbers mixed up. The energy sector was up 4.7% today. And then the energy sector was up 10.2% for the week, extending its year-to-date gain to 49.2%. Where in the market have you been able to gain nearly 50% all year? Outside of energy, let me know in the comments below, where's a sector, even maybe some specific stocks, outside of the energy sector that has gained nearly 50% year to date? Also, treasuries ended the day on a mixed note. The 10-year, which again, you can go to all of these charts, US 10Y, takes you to the 10-year yield. It rose 6 basis points to 1.2. I'm sorry, my apologies. Getting my numbers mixed up again. I was looking at the screen over here instead of my notes over there. It rose 6 basis points, the 10-year yield, to 3.12%, hitting a fresh high for the year. And it is now settled a little bit higher at 3.136%. Remember earlier this week talking about the 10-year yield? If we go back a little bit in time, okay, to October of 2018, the 10-year yield was at 3.25%. That's where it peaked. And I said that I could totally see the 10-year yield getting to that area. And it's heading right for that spot. But its trajectory, that's the concerning part. Look at how this is almost straight up. That happened back here on February of 2021 up to March of 2021 before reaching its top and rolling over. it typically doesn't shoot up this straight. You know, I guess there was this point right here in 2016 where it like gapped up. It went up so far and so fast, but that's not what it typically does. Now, the 2-year today, that fell 5 basis points. Looking at the 2-year, it's US 02Y. That takes you to the 2-year. And look at that. I mean, it's been going nearly straight up too. But it closed today at 2.67%. And now in the after hours, it's up to 2.74%. It's climbing too, just as fast. Now, the 2-year is more sensitive to what the Fed does and the Fed's fund rate than the 10-year is. So we do keep that in mind. Now, on today's economic data, that included the April jobs report and the March consumer credit. What do you think happened? April non-farm payrolls increased by 428,000. We were expecting 395,000. April unemployment rate was 3.6%, which remained the same as March, which was also 3.6%. People unemployed for 27 weeks or more accounted for 25.2% of the unemployed versus 23.9% in March. The U6 unemployment rate, which accounts for unemployed and underemployed workers, was 7% versus 6.9% in March. So that's gone up. April's average hourly earnings were up 0.3% versus a 0.5% increase in March. So that slowed down. Over the last 12 months, average hourly earnings have risen 5.5% versus 5.6% for the 12 months ending in March. Is that 8.5%? No, it's not even close. Inflation is at 8.5% for March. So wages are not keeping up, and that's what consumers are feeling. They're feeling the pressure of inflation. Now, the average work week in April was 34.6%, 34.6, not percent, 34.6 hours, which was the exact same in March. The labor force participation rate dipped to 62.2% from 62.4% in March. I know it doesn't seem like a big drop, but it's a drop nonetheless. The employment population ratio, or the employment population ratio, it actually decreased to 60% from 60.1% in March. And I know, again, it doesn't seem like a big drop, but it's a drop nonetheless. Going over to consumer credit. Consumer credit increased by $52.4 billion in March. It increased in February to $37.7 billion. So consumers have run out of savings from all the stimulus given out and are now going into debt to either maintain their lifestyle because they're not expecting the economy to fail. They're not expecting the economy to slow down even. Or and or possibly consumers have run down their savings account and now they're using credit to buy what they need to live: food, shelter, clothing. I hope there's a picture starting to form. I hope there's a picture that you can start to see. All of this new data is just it's continuing to point to a slowing economy. I know, stop the FUD, Adam. Just quit it, cut it out. Be one of those YouTubers who are just happy and pump up stocks all the time. No, I want to be real with you. I want you to know what's coming so you can be prepared. Now, next week, specifically on Wednesday, funny, we got the FOMC this past Wednesday. Now, this coming Wednesday, May 11th, we get April's CPI data. Now, we talked about this a little bit in yesterday's live stream. I was looking for expectations. Last night, earlier today, Google search, April CPI expectation. There's not much. I did find an expectation that says CPI will be 4.7%. Here, I'll pull it up and show you. All right, when I pull this over, there's this first box right here that talks about core CPI. And this is from ihsmarket.com. Week ahead, economic preview, week of 11 April 2022. I'll open up that tab there. But it says core CPI, which strips away energy and some other categories. But it says core CPI is likewise expected to tick up to 6.6% year over year, which could garner further concerns from a market that is already pricing in a 50 basis point interest rate hike in May. All right, so now when I come over here, got cookies in the way. This purple highlighted area, this is what came up from the search, right? It says what to watch. It says North America, US March CPI, PPI, retail sales, industrial production data, BOC rate decision. Well, the PPI is the producer price index. It's also important. And it talks about how CPI from the 40-year high of 7.9% year over year in February to 8.3% in March. Core CPI likewise expected to tick up to 6.6% year over year. Okay. Now, when we come back here to search and we go down and we start looking for things, we see inflation likely accelerated in March. Well, that's old news. This one right here is old news. It's talking about what happened in March. And we go down here. This one, in March 2022, the rate was 7.3%. based on, well, again, it's not exactly what we're looking for. Except for the headline here, expected inflation rate for April 2022, 7.4%. And it's got retail inflation here, saying touch 7.4, 7.5 in April. That's from a couple days ago. So if inflation is going to be 7.4% in April, well, that'll be down from the March 8.5. Are we at peak inflation? Are we at peak inflation? And what does that mean if we are? Now, this 7.4%, it just doesn't feel right to me. It feels off. Now, as you can see when I showed you the search results, there's not many articles speaking about peak and there are a lot of articles out there, many articles speaking about peak inflation, but there's not many that are talking about the expectations, CPI expectation for April 2022. That's what I put in the search, right? You can even go to the news week ahead. This is the same IHS market that we looked at. Retail inflation. We don't need retail inflation. And then 1 month ago, that's old news. 3 weeks ago, old news. Talking about March, 8.5%. Now we get South Korea, Germany, South Korea. So you got to dig deep in these search results to try to find anything worth looking for. And there's not a lot of expectations that I can find out there. Gas price is terrible. Absolutely. When Keystone Pipeline was shut off by B, and I get your B there, it went up rapidly. That reflected into all and killed all. Yes, the Keystone Pipeline, in my opinion, and not bringing politics into it, my opinion should be open. They should not have stopped that project. We should be striving for energy independent right now, not relying on anyone else for our energy needs. That would bring energy prices down, and I believe rapidly. And it would also settle the market, I think, a little bit too. It wouldn't drag the market down like it has been. Now, of course, the oil trade, if you're trading that, of course, that's been great for you. And it may continue to be good as we continue moving on down the road. But I talked about this earlier, and I know this seems like a downer episode, and I get that. But I hope that you can see that I'm feeling a bit frustrated. I'm trying to be honest about what's happening to the market. I don't want to say, oh, yeah, we're going to get a green day on Monday. Everything is great. Look at this. Oh, and then, man, I should have been more honest with everyone. When the market goes down another 10%, why was I cheering for telling everyone the market's going to go up and look at this stock, look at that stock. Oh, yeah, there's all these stocks. They're going to go up. They're going to go do great. You should go invest. No, I don't want to be that guy on YouTube. I hope you're watching this video so you can get a real take on the market. I know many of you who are watching, you already know we were trying to buy a house. We live in Northern Virginia. We were trying to buy a house, and since I'm in a wheelchair, we've got to be a little picky on the type of house that we can move into. You know, a 2-story house doesn't exactly work when you're in a wheelchair. I mean, we do have a chairlift in the garage in storage right now that we could use, depending on the way the staircase is set up in a 2-story house. But a 1-story house would work great. And in Northern Virginia, there's not very many 1-story homes, so it does make it difficult. So we got priced out of the market from November to right now. Mortgage rates right here in Northern Virginia and all across the United States have gone up $700 a month just since November of last year. So when you look at a mortgage, it's going to cost $2,000 or $2,500, and you get that budgeted in and you're okay. You get your pre-approval letter. All right, you can buy a house up to X amount of dollars, and you're spending $2,500 a month and on your mortgage payment and insurance, and everything is good. And then interest rates shoot up so fast that it is pricing many Americans out of buying a home. Affordability is one of the biggest problems. And why is affordability a problem in the housing market? Because there's not enough homes. We've got a housing shortage in America. And I guess my point to all of this is just to I wanted to mention what I talked about a couple live streams ago, is that diesel fuel, right? Diesel fuel, it affects everything. Our trucks that deliver everything from clothing to building materials for homes to groceries to food, right? To water. The big ships, container ships that bring in all of the goods that we buy. Nearly everything is affected by the price of diesel. And as diesel continues to rise, so will the price of everything else. Now, back to this inflation bit. There's not a lot of expectations that I can find out there about what to expect on Wednesday. I'm sure as we get closer, maybe we'll get what the expectation is a little more clearer. Even the Newswire service that I use, which usually has that information, it's blank right now. But there are articles talking about peak inflation. And agree. Yep. High price of gas makes people. Yep. You're absolutely right. Absolutely right. But peak inflation. I sent a note to everyone on Patreon about peak inflation being a peak in the economic recovery, which could really be happening right now. And, by the way, a selfless plug here. If you haven't joined us over there already, click the first link in the description or the pinned link in the live chat and join us over there. I'd love to see you. We release a ton of helpful information. And if the economy really is slowing right now, like I believe that it is, that information is going to become even more valuable as this market becomes more unpredictable. Okay. We usually don't know we're in a recession until we're already in a recession, because to technically be in a recession, you need to have 2 consecutive quarters of contracting GDP. Well, we got our first quarter of contraction in the first quarter of 2022 by 1.4%. So we only need one more quarter, and it could be this quarter we're in right now. This could be a contracting GDP quarter, and then boom, we're in a recession. Now, most of the time, we're not self-aware enough. We don't have all the information available to us like we do today to understand these concepts and to understand that, oh, we might be in a recession right now. We usually don't hear it on the news until the second contracting quarter of GDP. We're in a recession. Because another part to being in a recession is high unemployment. Well, we don't have high unemployment, but what did I say with all the employment data that came out today? Unemployment remained flat month over month. Some employment data ticked up. So maybe we've reached the peak on that. And if we are in a recession and we are in the second quarter of contracting GDP, then maybe businesses are slowing down their hiring. Even though we've got over 11 million jobs open, the economic data that we're getting right now seems to be pointing that we're slowing down. This means that the market is only just beginning in this fall. And maybe we'll hit that 20% drop that I showed you guys a few days ago that I forecast to be 3 to 6 months from now, sooner than that 3 months. I mean, look at how far the market dropped starting on April the 21st, just going then to April the 29th. I want to measure that right quick. I don't remember off the top of my head what this drop was. All right, move out of the way there. There we go. An 8.3% drop in just a few days. 8.3% drop on a major, the S&P 500, a major index. See, the timing is always hard to nail down. That's why the old adage of time in the market beats timing the market, right? But actually knowing that time is hard. Sometimes you know where we're going. You just don't know how long it's going to take to get there. You may have a ballpark, an estimate. You know, if I'm going to take a trip and drive from Northern Virginia to North Carolina and the Virginia-North Carolina border, takes about 3 hours driving. What if I run into road construction? Then it'll take longer. See, we know where we want to go. We know where we might be going, right? We know where we might be going with the economy, a slowdown. I mean, all you have to do is look at all the e-commerce that reported earnings this week. They don't have very good forecasts, or they didn't do very good at all last quarter, and have a pretty poor forecast. So we can see where we're going. We're just not sure on the time. We're seeing worrisome signs right now in the housing market. Just look at Zillow's earnings. And Zillow's earnings call, to be more precise. You know, first, we had the dot-com bubble, right? Then we had the housing bubble. So that was The dot-com bubble was in the 2000s, right? The housing bubble was in 08, 2008. And some are now saying that we have a bond bubble. Basically, the can has been kicked down the road for decades, and we're getting to the end of that road. Can the can be kicked anymore without maybe falling over a cliff? I know it's a tough one, especially on a Friday. I don't usually, come at these videos with such a negative take, but the painting of the picture just became a little clearer for me today with some of the economic data that came out. And I just want you to be prepared. I'm not trying to be a Debbie Downer. I'm not trying to be a FUD spreader. I'm not trying to shill fear, uncertainty, and doubt. I just want to be real and be honest about what I'm seeing. So here's where we stand year to date. The Dow Jones is down 9.5% year to date. The S&P 500 down 13.5% year to date. The Russell 2000 down 18.1% year to date, and the Nasdaq in bear territory is down 22.4% year to date. Let's see here. No, I'm late. Oh, it's okay. It's okay. It wasn't quite, honestly, you don't have to go back to the beginning of this one. Today we just painted a picture that seemed kind of down. And it's kind of a reflection of this week, right? And a reflection of the economic data that we got this week. And it's like little cracks are starting to form to show that the economy is slowing down. And I since the beginning, since January 3rd, when the very first video of this new year, you can go back to January 3rd on the channel and watch the video. I'm 99.9% sure it's in there. Maybe January the 4th. I said that the second half of this year is going to be worse than the first half of this year, meaning the economy is going to slow down. And we just keep, we just keep getting little more pieces of data that confirm this. And it's just bringing the market down. So this target down here for the S&P 500 of 3760, that's the 20% that would put the S&P 500 technically in a bear market. Now, we don't need a technical definition to tell us that we have shifted to a bear market. I mean, the post-FOMC meeting rally, and then yesterday's shellacking where the market just gave it all back, all those gains melted away, that is as clear as it gets that we're in a bear market. And again, I know it's Friday, and I hate to share this negative picture on a Friday when you're about to go have a great weekend. I didn't want to do it, but I have to be honest. I can't pretend that I'm seeing something different. I'm sharing what's right in front of us. Okay, so let's see. Off-topic question. Do you use Benghazi Pro? No, I do not. If so, do you recommend it? I'm always late to news and it screws over my trades. No, I do not use their Pro service. For general, I guess I could say for general sources, I use Seeking Alpha. I know they have a paid plan. And they have a lot of breaking news that comes across. So I can say that Seeking Alpha is a pretty decent source. I'll put the link in the live chat here in case you haven't looked them up before. But they do a good job. If there's a particular company that you're following or sector that you're following, they do a good job of sharing that information, emailing you with constant alerts and what's happening. That's a source that I think is pretty good. Me personally, what I use is Bloomberg. It's where I get all the headline news, and a lot of it, I keep it open right here on my screen, right here beside where the live chat is. But since it's behind a paywall, I can't share it. But, you know, I mean, every second when a piece of news comes out, it's there. But Bloomberg is very expensive to use. And that's one reason why, I don't know, I started sharing videos. If you're paying for access to information, then, you know, it's almost your responsibility that if it's something that you think the community would like and be interested in, then pass that along. And that's one thing. That's besides answering your questions, the second purpose of doing the live stream, not the standalone pre-recorded videos that go out, but to do the live stream is to take the information that I've gathered from Bloomberg and share it in what I try to do as a quick take, but they always end up being a bit longer than what quick should be. If you're not looking for general news, if you're looking for company specific, then I would make sure to get the RSS feed or email sign up for whatever company you're interested in. I do this with a lot of the companies, and it's the quickest way to get the information. So remember just to, if you open up your search engine, you type in a company name, go with Tesla, and then do investor. And I do it so often that it automatically pops up. Company name, whatever company name is, and then investor relations. and it will give you the links. It takes you directly to the company's investor page where you can find presentations, you can find all their SEC filings, you can find all of their latest news updates, their press releases, their earnings, every piece of information that you would want or need to know about the company is there. And for Tesla here, you go to press releases, and I have I use Google Chrome, and I have a oh, what are they called? It's not a widget. Oh, what are these things called? Extensions. I've got an RSS reader extension that I use, and that's how I pull all of the information together from multiple different companies. So whenever a news article pops up, you get it. Now, not all companies have an RSS capable website, but the majority do. And if it's one that doesn't, then I haven't found a way yet to be able to pull that information. And if they don't have an email sign up or they don't have an RSS, then there's really no way to get it unless you're following a very specific news wire. You can also go to press release sites. Let's see here what pops up. PR Newswire, PR Web, PR.com. Any of these would probably work. So let's just do this. PR Newswire. So you can always use one of these services too, where you can create an account and you can follow different companies. You can follow many different things. So that way, if a company does release a press release, then you're getting it just as quick as the media would get it. So you'd actually be getting the information a bit quicker than the average investor by doing that, because the average investor is going to wait for the news story to come out, wait for a news organization to publish the news in the press release. So you're just getting it just as quick as the media is getting it. And that's beating the average investor that way. So that's a couple of ways to get information. When we're trading, information is very, very valuable. Do they have a squawk? I don't think so. They do not have anything like that. I don't think so. Seeking Alpha, I believe, is what your question's referring to. I do not think that they do. I know that it's just... It's, let's see here. I haven't looked at their pro site before. What does it cost here? Nasdaq Basic 15. So the basic plan, not the free one, $27 a month, 15-minute delayed quotes. You can just go to TradingView for quotes from different companies. Full news feed, no advanced filtering, chat, movers, watch list alerts, premium articles. Well, see, the premium article part right here, I definitely like Seeking Alpha's articles much better than here. Let's see here. Has filters and big breaking news via voice. Yeah. I don't know if Seeking Alpha. I think they've started doing video, but I don't use it for video. Also, TradingView. When you're on a company's chart, over here on the right-hand side, you do have headline news for whatever that ticker is. And it comes from a lot of different sources, including from over here. So sometimes it'll take you directly to the article for whatever it is. Let me actually go to, instead of the S&P 500, let's, oh, why did it do this? Come on, TradingView. And it turned on dark mode. Okay, there we go, much better. So if I go to Tesla, for example, and on the headline news over here, you click on it, it takes you to the article. This is from Reuters. Let's see. Oh, see right here. This is from Benzinga. So a Benzinga article right here from TradingView. So TradingView aggregates a lot of different news sources. This one's from MT Newswire, which is a PR press release type of company that we looked at a different one earlier. So you have this over here, and on TradingView, I'm not trying to sell TradingView to compare it to anything, but you know, some of the information you can get here, and you can set alerts on TradingView for different types of price actions for stocks that you're watching and so forth. So full news feed, no advanced filtering. Well, I know with Seeking Alpha, you have advanced filtering. You have advanced watch list. Let me come over here for just a moment. I'm gonna sign out. Seeking Alpha has a lot of tools. They also have alerts, breaking news, tons of information. I thought I logged out. Okay, so let's see here. Seeking Alpha Premium, $20 a month. Unlimited access to premium content. All right, so that's like over here. Seeking alpha author ratings, seeking alpha author performance, stock quotes, dividend grades, light on ads. I'd compare Benzenga. I'd compare that to Seeking Alpha and see which one is better for you, because $20 a month versus $27 a month for basic is a little bit of difference. I mean, we're investors, right? We want to try to save money. Let's see here. How about Market Watch? Let's see. I know Market Watch comes up through on TradingView, because I see this. I see their logo a lot. So a lot of their articles do show up on TradingView in the headline news section. So when you're on the page on the right hand side underneath the alerts, the headlines for that ticker symbol and wherever it comes from Twitter, Tesla's website, Benghazi, what I can never pronounce the name right. Benzenga. But I don't think Seeking Alpha is. MT Newswire is, but Market Watch isn't too bad. They've got some news. All right, where is... Huh. What's it cost afterwards? Live streaming is important for fast information as possible. You are correct. That's why I keep my terminal opened, and it's constantly news just going. Sometimes pretty quick, especially during the day, during a regular session hours. What's the cost? Where I didn't see where to get. Oh, $22.99 per month thereafter. So Market Watch and Barron's, or just Market Watch, $20 per month thereafter. Unlimited access to Market Watch, member exclusive content, watch list and newsletters, faster site speed due to fewer ads. So $20 a month, $20 a month, $27 a month. If I was choosing between these, I would choose Seeking Alpha. Only, I guess I'm being a little biased there, because I like using Seeking Alpha. I think their content is from many different points of view, because Seeking Alpha itself publishes breaking news, right? And they send you an email alert. They send you an alert whenever a company you're following, news breaks on that company. you get an alert, an email about that information. But then they have a whole network of authors. And I've actually thought about becoming an author for Seeking Alpha too. And then you have all these different points of view writing about different companies. So it's not just Seeking Alpha and Seeking Alpha's narrative in these different articles. These are independent writers writing for Seeking Alpha, and it really opens you up to, maybe stuff you haven't thought about before. That's why I like Seeking Alpha. I'm not sure how it works for Benzenga or for Market Watch. But just by being on their sites, sometimes the articles, I know I'm not looking at the articles that are behind their paywall, but sometimes I think their articles are not very in-depth, right? They give you a very surface level bit of information. But if they've got live streaming, which I know they do have video. I know Benzenga does have videos. But the screener, TradingView has got an excellent screener. I don't know what signals are. That squawk thing looks pretty cool. So, see, this is with Bloomberg has something similar to this as well. Interesting. Yeah, that is interesting. I don't know that Seeking Alpha has something like that. Anything Russia said would tank the market. Yeah. The squawk was so helpful during the Russia invasion. Anything Russia said would tank the market. Yeah, it almost seems like those headlines have that's cool. It's almost like those headlines now from Russia, they don't seem to affect the market as they used to, right? When the invasion first happened, obviously the market tanked, but it seems to be wearing thin. Like you're hearing the same thing over and over again. Therefore, it's becoming less sharp and more blunted. I wish it would stop. I mean, that would help a lot of things. It would help a lot, especially fertilizers. Wow. Yeah, not anymore. So do you like Seeking Alpha and Bloomberg? I guess Bloomberg is market maker. Yeah, Bloomberg has got a lot. Now, obviously there's two different Bloombergs, right? You have Bloomberg.com, which again, it's got a paywall and it gives you information. But the terminal is something completely different. Way different. let's see. So $35 a month just for the typical Bloomberg website. And with seeking, to answer your question, so you like Seeking Alpha and Bloomberg. I guess Bloomberg is market maker. Yeah, not anymore. I don't use Seeking Alpha anymore. I need to, I really need to cut the subscription there. But because Bloomberg has everything that you need. Absolutely everything. So this would be the terminal, right? Which has absolutely everything that you could possibly imagine. And I don't even think they put a price on here for the cost. I think you have to contact them. Yeah, you have to. They don't even put if you have to ask how much something is, it's too expensive, right? Isn't that the old saying? But it's a whole process to get on the terminal, and it's it's mainly for institutionals, but it helps me gather information quickly, which then allows me to share that information with you guys. So Seeking Alpha don't really use anymore because having the terminal, you have everything that you need. So I use that, and I use TradingView, and that's really where my two focuses are during the market, after the market. TradingView also has a big community, a really big community, and they are constantly doing updates. I mean, over here on the right hand side, there's chats going on, ideas. There's an idea stream, which is just constantly people sharing their thoughts on different chart setups and so forth. And you can do it by ticker, company, authors that you might follow. So yeah. Any other questions that you guys might have? We can go over them. I know it's a Friday. Probably want to wrap it up. So watch for videos that I have coming out this weekend. I've got one for AMD. I've got one for Zillow, DoorDash already lined up and ready to go. So those 3 videos will be uploaded this weekend. And yeah, I guess that's it. So if there's no other questions, I'll wrap it up here for the day. So, boy, oh boy. So for Monday, what do we think is going to go on Monday? Well, just like this week, right? Monday, we hit a low in the market. It was actually the third, well, it was the low for the year so far. We hit a new low for the year on Monday. And that was leading up to Wednesday's Fed announcement. Well, this week, on Wednesday, we get our CPI data. So the market is going to be cranky until Wednesday. And then Wednesday morning, after we get that data, if inflation has come down, like some outlets are talking about, that could turn the market around. But watch out for selling into strength. Because if we've reached peak inflation, we have also reached peak economic recovery. And if inflation is now coming down, then so is the economy. As a matter of fact, on Patreon, there's a note that I published, and it is called something about peak inflation. Go read that, and that'll let you know what I'm thinking about when I'm talking about peak inflation means peak economic growth. It means the economy is also now slowing down. So I think one of the lines I used in there is like cheering for peak inflation is like cheering for peak economic recovery, something like that. So check that note out. But Monday could also bring us lower, right? RSI right now is at a 40.8. We can go lower. Money flow is not at the bottom. It's at a 34.6. See, both of those indicators really flattened out. Really flattened out. And I know we looked at the MACD a while ago or earlier this week. And see, look at this. This is very interesting. Remember earlier this week when we looked at the MACD and it looked like the blue line was crossing over with the orange line to go up? Yeah, it didn't end up crossing. It's separated. And now both of them are pointing down. So we are not at a point where momentum is swinging back up. I believe I don't remember which day that was now this week when we talked about that. I was trying to remember. Because sometimes, like when we go back here, when we hit the low on March 14th, the blue line is under the orange line or red line. And once it crosses up, that's when you get your signal that momentum is shifting. Momentum is changing and then rising. And that's when we got our snapback rally from the death cross. Well, this week, they were about ready to cross. The blue line was about ready to cross, but no, they have separated. So we could fall on Monday. We could fall lower on Monday. That would not surprise me. It would not surprise me if on Monday we set a new low for the year. That wouldn't surprise me. It also wouldn't surprise me if we just kind of move sideways in this box right here on the S&P 500, somewhere between 4,100 and 4,200 until Wednesday. And then Wednesday morning, once we get the fresh CPI print and we can see what the inflation reading is, which I know some believe the CPI is rigged, I guess a word I could use, or maybe a better word I could use would be cherry-picked information, and don't put a lot of faith in it, but it does move the market. So that's what this week will be about. The narrative this week will be all about inflation, and is inflation going to go higher? Is inflation peaking? There'll be a big conversation around, is inflation peaking? Let's see here. Many went to opposite ways historically. Good months like January went bad and April went bad. I relied on this history, made me terrible mistakes. I expect down, but didn't expect this much down. When the Build Back Better was canceled, steam started to fall. That point, I should sell a lot, but didn't. That was my mistake. Gotcha. Some believe that all the spending that we have gone through as a country has a part to play with the inflation readings, the high inflation that we're getting. There's a real neat I'll have to do a little more research on it. There's a very interesting economist who is talking about the tech bubble, the housing bubble, and now we're in a bond bubble. And the only way out of it is to inflate it away. And the inflation that we're seeing now is a byproduct of kicking the can down the road with these tech bubbles, housing bubbles, and these different things. But I have to do more research to really talk about it, because I only know surface level from the little bit of reading on it I've done. But it's an interesting one. All right. Well, I guess we'll wrap it up here. Monday, I really think we could see a new low in the market, or we can move sideways. I don't think we're going to see a rally short term. Obviously, if inflation comes in lower than March, that may be some sort of a catalyst for the market. It certainly could be. If inflation comes in hot, then that is definitely a catalyst that I think could send the market lower. So this week it'll be all about inflation. You are welcome. I greatly appreciate it. I'm glad you're here. Any questions, just let me know. You can always ask questions over on Patreon, and I answer those as well over there. So you can ask anything you want. You are welcome. You have a great weekend too. And absolutely, let's hope that Monday, let me put this one up. Let's hope that Monday is a better day and we do not see a new low for the year on Monday. All right. Well, we'll wrap it up here. Watch out for the videos coming out this weekend. Make sure you're subscribed so you get those. Click the like button, share the video, really helps. And of course, if you're not already, click the first link in the description or the pinned comment in the live chat. Join us on Patreon. Tons of information over there, very valuable. for you guys. So thank you very much for watching, and I'll see you in the next video. Take care. Have a great weekend.